what's up? Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Your boy.
All right, so let's bring in my guy, Josh Brown, the legendary Josh Brown has entered the chat. Long Island's own.
Yo, I knew he was coming, so I put up the Wu-Tang and I put up BIG in honor of Josh. And he takes me as a sneaker guy. He takes me as a Jordan 1, so I put those up for you too, Josh.
All right, I'm here. Wait, can you guys hear me?
Yeah, I can see you.
Yes.
How you doing, man?
I miss you guys. Happy New Year.
Happy New Year, man.
How you doing?
Happy New Year.
We did it. When was the last time we did this? Like last winter, right?
Yeah, it was a year ago.
Almost a year ago, yeah.
Like last January.
Yeah.
Oh man, that was fun. I'm so happy to be back. Thank you so much for inviting me.
Nah, it's a
all
pleasure.
love, man.
Always a pleasure. Always a pleasure.
Did you hear the part about? Oh, you got the shirt on. Okay,
yeah, I like
somebody got that.
My
I said
guy.
I put
I'm
up.
telling you, I'm
put up
a
the
fan. Number one, I'm a fan. Oh, I see.
For
There you go.
Yeah,
me.
a little
Love
Wu-Tang.
it.
I know you love Wu-Tang.
And Iron Man. All right. Iron Man's in my top 5 of the solo Wu joints, but it's not top 3. It can't
What's
be
the
top
other
3.
4?
Yeah.
Liquid Swords is 1 for me.
I should have
And
put that
purple
up.
and purple tape is 2. But I go back and forth with those every once in a while. It's
Purple
whatever I
tape.
listen to last.
Purple
Yeah.
tape. That purple tape is
Purple
different.
tape, yeah,
purple
different.
tape is different. So
I mean,
Josh Brown needs no introduction, but I'll give one.
Ian looks like he's in the purple tape right now.
That crystal ball glowing, baby.
All right, sorry.
Chart on, colors on.
Josh is the superstar of CNBC's halftime report. He's also the CEO of Ritz-Holtz Wealth Management.
Nailed it.
A boutique wealth management firm in Manhattan. The guy is extremely, extremely intelligent. One of the smartest people that you'll ever hear talk about stocks, and very, very fun, cool guy. Who we've had the pleasure of connecting with last year through Matt. Shout out to Matt.
Yep. Shout out, Matt.
Yeah, it's been a great relationship ever since. So, Josh, welcome back, brother.
Thank you so much. Great to be here.
So let's get into it. I guess we can all just trade off on asking questions. So Ian, I'll let you ask the first question, Ian.
Given everything that's happening in the market and everyone is panicking, give people some advice if they are getting their ass kicked in the market today.
Do you feel like everybody's panicking yet, or on the verge of panic? Like what? I'm not sure if I see a lot of panic. Yeah, they're there. I think
they're worried.
You know what? I think it depends on what your portfolio is made up of right now. Like if you're heavily into NASDAQ growth, large cap growth, if you're heavily into tech, yeah, I mean that's a whole other. We could go there, but that's like a whole other thing. But if that's what most of your money is invested in, you probably started panicking weeks ago. And it gets worse. It gets worse every day. But the reason I ask is I don't feel like the average investor is allocated that way. Like most people that are just like 401k participants, they're in life cycle funds. They have some exposure, but they have way more Apple than they have ARK. And I don't even think Apple is 5% off its high yet. Is it 6% maybe? Right?
Yeah. No.
I mean, it probably will be before this is over. But
No, it's not.
I guess panic is subjective, right? It's like it depends on who you're talking to. I'm not seeing a ton of it just yet, but if this goes on for another week or two, it'll be everywhere.
Yeah.
I don't know if we're there yet.
So let me ask you a question. Your comrade at CNBC, Jim Cramer, he said that the Dow Jones is being held up by bank stocks while tech is crashing, which brings up an interesting point that tech is not doing well, but bank stocks are doing well. XLF, which is the bank ETF, is almost 52-week high. And, JP Morgan is not doing bad, and Goldman Sachs and all these different things. So what's the deal with bank stocks, and how do you feel about investing in the banking sector?
Well, I think, so I own JP Morgan shares, and the financial sector is weird because a lot of the biggest financial companies in America are currently classified as tech stocks. Like PayPal is obviously a financial company. It's the bank of the new generation, but the index committee has it classified as a tech stock. I don't know why. Same thing with whatever we're calling Square now, Block. Believe it or not, even Visa and MasterCard are considered to be technology companies. And like, obviously they're engaged in finance, right? So I try. So I guess what the first thing I would say is I try not to get too hung up on definitions of like what you think a stock is, and maybe just try to focus on the company itself. Because one thing that's happened over the last 5 years is that the people running technology companies don't respect any borders. They're willing to go into any business they feel like going into. They don't care if this is considered tech, that's considered whatever. Take Uber. They're like in the food service business at this point. Food delivery is more revenue than ride hailing. So what is it, a transportation company? Like, what is it even, right? So I try not to get hung up. The thing with the Dow that's really interesting is the Dow is price weighted, which I know you guys know this, but I want to do this for the viewers because maybe it's been a while since you've gone over this. What makes it a really tough way to gauge what the market's really doing is that it's not weighted on market cap like the S&P 500. Like in the S&P 500, Apple and Microsoft have the biggest market cap, so they're the most important stocks. So what they're doing each day has the biggest impact on what the S&P does. Same with the Qs, the NASDAQ. The bigger stocks are more important. The Dow is weird. It's not based on market cap. It's based on the price of the stock, the share price. That's why Apple had to do a 7-for-1 split to get into the Dow. Yeah. The Dow didn't want to put $1,000 stock in there because it would be like 30% of the average, right? Mm-hmm. So if you look at the biggest weightings in the Dow right now, they're somewhat defensive. United Health is number one. Why is United Health number one? Again, look at the share price. It's hold on one sec.
465 right now.
465. So it's the highest priced stock. That's how crazy this is. It's the highest priced stock in the Dow. Therefore, it's 8.3% of the Dow. So UNH is a defensive stock. It's health. It's healthcare, literally insurance. So it's not going to trade like Nvidia. So that's what's keeping the Dow up. Number two, Goldman Sachs, 7.25% of the index. Number three, Home Depot, 7%. It's not until you get to number four, Microsoft, where you get a tech stock, and that's only a 5% weighting. So the Dow, when you just glance at it, it's misleading. The real market is the Russell 1000, which is the 1,000 largest companies trading in North America or the United States of America, yep. Or the S&P 500, which is the 500 largest. Like, that's, to me, much more representative. And the Dow does weird things in the short term, like holds up in a tape like this. And you're looking at it, you're like, wait, I don't understand what's going on. That's what's going on. It's got big defensive stocks with very high weightings.
Yeah. So I'll stay there with JP because today, Jamie Dimon, obviously the CEO of JP Morgan Chase, said that the U.S. is headed for its best economic growth in decades, almost comparable to right after the Great Depression. He said, based on the consumer balance sheet, it's never been in better shape, and that consumer spending is up 25% today more than pre-COVID. So what's your thoughts? Do you think, are we in a better shape based on what we've seen thus far in the first couple of days or week and a half or so of the market? Are we in a better shape for 2022?
Well, the consumer has never had a better balance sheet in our lifetimes. I think you guys are a little bit younger than me, but we're all kind of in the same generation.
Yeah.
Never in our lifetime has the consumer been in the condition the consumer is in. Now, why? Well, for a year, there was nothing to spend money on except, digital bullshit. But there's nothing to do, nowhere to go. The government was doing transfer payments directly into people's bank accounts. Interest rates were lowered to zero. So a lot of people were able to pay debt off. And that's where a lot of stimulus money went, to pay down credit cards. We know this empirically. This is data. It's not opinion. So what we did was a lot of balance sheet repair for, let's call it, the bottom quintile of American households. The bottom 20% by, let's say, net worth have had a really big benefit, despite all the sacrifice, have had a big financial benefit of both what the Fed has been doing and what the Treasury's been doing. And that's still with us. And that's the kind of thing that has compounded. And so those numbers look really good. Ironically, that may not be a great signal for what the stock market might do. In 1994, the Fed was so worried about how great the economy was, this is Alan Greenspan, that they shocked everybody. I think they did an overnight 75 basis point rate hike in 94. Go look at a chart of 10-year Treasury and look at a chart of the S&P 500. Right after he did that was a 20% correction for stocks.
Jesus.
Instant, almost because not because it was such a terrible thing to raise rates. They should have raised rates. Investors don't do well with uncertainty and with surprise.
Yeah.
Right. So it's about surprise. So the economy in 94 was sick, and 1995 actually statistically is the best year for the stock market of all time. 1995. But you had to have that pain in 94 as expectations changed and the Fed was normalizing, interest rate policies, raising rates in order to counteract how strong the consumer was, how great the economy was. So ironically, we may be set up for a tough year as interest rates get to a normal place. It may not be a fun year for stocks, even if it's a great year for the U.S. consumer, for shopping, for Main Street. And it's okay. We're all in this economy together. It's okay if our stocks go nowhere for a year, but people we know see their finances improve or get a raise or whatever. We have to accept that not every year is going to be a 30% year. It's not realistic to expect that.
In 94, the drop was 20%, you said. What was the return for 95? Do you remember? Just to give perspective.
48%, no 5% pullbacks or some crazy shit like that. It was so statistically, when how do you decide what's the best year for stocks ever? It's not just how much do they go up. How many sectors went up? All of them in that case.
Yeah.
How much volatility? There wasn't any that year. None. Right? How many new highs? Almost every day a new high. So that's a great way to kind of think about. Now, here's what's interesting about the year we've just been through. The deepest pullback was 5.7% peak to trough in the S&P, which is nothing.
That's nothing.
Nothing.
Yeah, not even a correction.
Nothing. We had Delta this summer, and we still couldn't get more than a 5% peak to trough pullback. And some stocks didn't even participate. I don't think Apple went down at all. And
Barely
that's the most
moved.
widely held stock in America. Right. So that's on the surface. You did 28% total return, including dividends. Nothing worse than a 5.7% pullback. Now, beneath the surface, I think half of all NASDAQ stocks are in or 40% of NASDAQ stocks were in a 50% drawdown. There was a lot of pain that took place starting last summer, and we're still feeling the effects of that. There are broken charts everywhere, IPOs, SPACs, Cathie Wood, all of that. We're talking about hundreds and hundreds of important stocks that their highs were July, August, and people are just getting absolutely wrecked. So the version of the market that you experience, this is the first question we started off with tonight, quite often is a consequence of what your allocations look like and what you own. That'll color your opinion of it's a good market, it's a bad market.
Josh, let me ask. Well, first, YouTube. Shout out to YouTube. 7,600 people, and we are competing against the first ever Monday Night Football.
Oh no, the national championship.
National champion.
Okay.
Nick Spurs.
Yeah, no, Nick Spurs.
See,
That game the other night was crazy, though.
Yeah,
We're competing against the national championship game.
Yeah. You kept bringing up 94 and made me think of the Knicks. The last time they won the
Is this true? Is this true story? You guys had Panick on, and he had the Knicks game on next to the screen. Is that true?
We'll talk about that later.
I heard there was some blowback.
Shout out to the countdown.
Shout out, Mike. I love you, dearly.
That's real fucked. I love Mike. That's
Gary,
fucked
JC.
up though.
He had a reason, though. It wasn't
I'm here to
this.
redeem us. That's
nah,
what I'm
Countdown
saying.
has been represented.
Nah, you're doing a great
You're
job.
funny. You're doing great.
The resurrection.
This that Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Red Panda, what's
This
good?
that Red Panda Anthem.
Your
Whole
boy.
clip going up. I know they can't stand it.